right, welcome to our Wednesday live real estate chats. Today we have one of our favorite lenders, Anna Cook. Anna, thank you for coming on.
Always. It's always a pleasure. I love being on here with you guys and sharing all the knowledge about all things mortgages.
Well, and today we're going to hit a topic that hopefully will be of interest to a lot of people and also provide quite a bit of education. So, our topic today is jumbo loans, and everybody's probably heard that word.
What is a jumbo loan? It sounds like a $5 million loan. No?
Sounds like a jumbo amount of cash.
Yeah.
Yes. So there's a lot of misconceptions about jumbo loans. One of them being that it is, $4 or $5 million, et cetera. But really, what it means is a jumbo loan is a loan that's over what we call the conforming limits, and that's lender speak. So I'm going to break it down a minute. The two main lenders in the conventional world are Fannie Mae and Freddie Mac, and they have a loan limit that they determine is the conforming limit for all mortgages within a certain area code, zip code, county each year. And once you get above that average loan limit for an area, you're out of a conforming loan amount and you're in jumbo status, which means that you have to go to a private investor in order to get that mortgage. That's the really long short of it with the jumbo loan. What that means is that really if you're over a certain price point, you're going to have a different type of loan product than if you're below that price point. That's what a jumbo loan is.
Gotcha. Okay. And then you mentioned that they are specific to area code and area and that they change every year. So tell us about what that means.
So basically, we have, the federal government looks at what is the trends in the market and what's the average loan amount or the standard loan amount for an area where it's overpriced in that area, that it determines whether it's conventional or jumbo. And so every year they look back at the data and determine what's the new conforming limit. So there's a universal one across the nation in terms of what's the standard, but then it varies slightly per zip code because some areas like out west have higher loan amounts than here, in the South. In Davidson County and Nashville, they have an average higher loan amount than, say, maybe Sumner County or Williamson County. And so sometimes, even though there's a blanket, they'll then say, well, here's the standard universally across America, but then in each county, depending on if that average, they'll raise that a little bit. And so it's pretty common for your bigger cities to have a higher loan amount than your suburbs or your smaller cities. And the misconception is when the news comes out, it always comes out about November, what the new conforming limit's going to be for lenders in general. A lot of people have a misconception that that's the standard for every county, and it's not. It actually can vary by county as well. So it's really important to pay attention to that when you're buying in certain counties or certain states as well.
Well, what kind of numbers are we talking about? Like Davidson County versus Sumner or Robertson County?
Yeah, well, and I probably should specify, I was using county specifically because of the way Middle Tennessee works. We kind of get clumped in all together, the major suburbs with the metro Nashville area. If you're from Nashville, you remember us being called Greater Nashville. So they still really look at that. But if you were to go outside to maybe Jackson, Tennessee or Chattanooga, you get a little bit further out, it does vary even more so. But for instance, the average, the limit this year total across the board is $726,200. So if you have a loan amount, not a purchase price, but a loan amount of $726,200, you're still in conforming conventional limits. Once you go above that, you can be potentially in jumbo status or high balance status. And so in Davidson County specifically, though, we're up to almost 1.1 million before you're in jumbo status. So the national average is the 726,200, but in certain counties like Hawaii, there's certain places in Hawaii, there's certain places in California, here in Davidson, Metro Nashville area, you can get a conforming conventional loan at $1,889,300 and still get conventional rates, still only need to put down 5% instead of 20% and get into a mortgage. And that's really unique because a lot of your jumbo products require a larger down payment. So it's allowing people to buy houses in their market but not be subjected to the jumbo loans.
Well, so specifically for somebody who may be right on the verge of that, maybe just a little over that, what's the biggest? You could obviously put more down.
Yep.
In order to get up under that. But what's the biggest differences in the cost or how that works?
So typically in the past, we've seen jumbo products typically have a little higher interest rates because they are private investors. You typically see a requirement for a larger down payment. The biggest difference, the jumbo difference, is that we really have stricter guidelines when you're buying a house and you have a loan amount above the conforming limits. The restrictions on what we require for income, assets, DTI, debt to income ratio, all of that gets stricter because you're borrowing more money, so you're at a higher risk, right? So if we can get into the conforming limits, you typically can put less money down, have a little bit higher debt to income ratio. We're a little bit more flexible with self-employment or second homes and things like that. So it really depends on your portfolio. It depends on what you're trying to do. And it really depends on what you're trying to do with your money as well, because some people don't want to put a ton of money down and they want to hold that for investments, whereas other people want to get out of that jumbo limit so that they don't have some of those restrictions because maybe they are self-employed or they have a higher debt to income ratio. But the biggest difference of the two, the main difference, is the restrictions on the guidelines and the requirements on jumbo versus conventional. It's harder to be qualified on a jumbo loan, which is counterintuitive because if you can afford a jumbo house, a house in jumbo status, you would think, well, I have a
Jumbo
lot of
house.
money. Yeah, jumbo house, right? But people think, well, I have a lot of money, I can afford this. Why am I being restricted? Well, you're borrowing a lot more money than the conforming average person in America. So the guidelines are a lot stricter and it's private money. So they get to make the rules. It's not the conventional guidelines that everybody has to go against.
Right.
So anybody that's looking at a loan that's going to be close to this one way or the other, it's really
Mhm.
important to have the lender that knows what they're talking about to guide you in the right direction.
Yes.
Yeah, for sure. And I like the fact that you specified, this is a jumbo loan is the loan amount and not the sales price. So if
Correct.
you're on $1 million house and over $1 million and you're putting it up down to where it's under that limit, then you're still within the conforming amount. So I don't want people to get confused.
Correct.
And think, I can't spend over 1 point, I can't buy the 1.1 because that puts me in jumbo status.
Jumbo,
because
yeah.
what you're borrowing against the house.
That is the number one misconception of jumbo loans is it's the purchase price instead of the loan amount. So think about it. If 1 million, roughly, 1,089,000 is the new conforming limit for Davidson County, and you want to put 5 or 10% down, you can be in 1.2, 1.3 million and put your normal down payment down and not be in jumbo status. Whereas a year ago, you had to put down 300,000, 400,000 to get below that jumbo status in that same price point because the loan amounts have gone up quite a bit. It really
a year ago it's gone up 300,000 or 400,000.
I should have had this for this call. I apologize, guys, but yeah, the loan limit jumped up. It was at least a $200,000 price point jump for the Davidson County area. So
I remember when it was like 400,000 was a jumbo loan.
Me too. Me too. Yeah. Well, and here's the big one too. FHA, you can put as little as 3.5% down. And they just changed a ton of their rules to make it more affordable for home buyers. The loan limit now for an FHA mortgage is $726,200. So you can buy a house, and as long as your loan amount is below $726,200, you can get in, as little as 3.5% down on FHA. And they've made it where the rates and the PMI are actually more favorable right now for FHA over some conventional products. And so you might save $200 to $300 going FHA over conventional at that same price point. So it's, yeah. And there's, a lot of misconceptions with FHA versus conventional, but really, I think that's going to be another trend this year with the conventional conforming limits going higher. You're going to see a lot of people be able to afford houses without having to put down 20, 30% for that jumbo product.
Yeah.
Nice.
Okay. Yeah. So talk about options. The different. What kind of options do people have if they are going to finance over that $1 million mark? And is there just one jumbo product, or are there multiple options? What does that look like? What are the people that are looking to finance that much money? What are their options? Like, what are some options and things they need to watch for?
That is really very lender specific. For instance, one of the reasons I love working for Cross Country Mortgage is we have over 15 to 20 jumbo products. I mean, we really do. We don't have just one size fits all. We work with a lot of different investors in the jumbo world. We have our own personal products that we've put together to make jumbo easier for our clientele. You know, some banks only have one product, and if you don't fit within that square, you're done with that product. You know, your a lot of your local banks, they're really strict, even more strict on those jumbo products because they're setting the rules for that. So, you know, it really depends on, are you a self-employed borrower? Is this an investment property? You know, do you want to keep some of your assets? Because there are jumbo products where you don't have to put 20% down. And that's a misconception too. A lot of people think you have to have 20, 25% to put down, you know, but if you have some other factors that make you a strong buyer, there are some of our private investors that allow us to do a little bit less money down because you have some compensating factors over here. There's not a one size fits all. We all manage our money a different way based off of where our portfolio is. And my luxury home buyers, my jumbo buyers, they need to have those options too, even if they're out of that conforming limit.
Sure, absolutely, absolutely. Is there anything else you can think about that somebody would need to know, questions they would need to ask, things, information they would need to have, when shopping these jumbo products?
The biggest thing with jumbo products, and it goes back to the guidelines part of it, is that they ask for and require more documentation than any other loan. And so it's not to get frustrated with that process, but understanding that you're going to be asked for more things once you get into that higher price point because you're borrowing a larger sum of money than the conforming limit. That's not us picking on our well-off buyers or our buyers who are going into that price point. And to give yourself time, jumbo loans typically take a little bit longer to close because of the private investor part. So, we average a 15-day close on a conforming loan, but we always ask for 30 to 35 days on a jumbo for that extra underwrite or that extra layer because they do ask for more documentation. We're not picking on anybody. We just, it's part of the requirements because it's a private investor instead of a standard Fannie Mae or Freddie Mac loan. So
I got
that's
a
the one
question.
thing.
When you mention private investor, I think a lot of people in my world think of, this guy over here has got all the money, invest in this product,
Yep.
in
Yeah.
this property, everything. And I know what it is, but explain what a
I love
private
that.
investor in this.
Yeah. So think Chase, think Wells Fargo, think Goldman Sachs. We have our own money that we lend to. So, not to get too into the weeds in secondary market, but Fannie Mae and Freddie Mac are the two secondary market providers that buy loans from lenders, and they don't buy loans that are over the conforming limit. So you have to find the people who are willing to lend the money and then buy the loans. And so it's typically these bigger banks, Wells, Chase, like I said, Goldman Sachs. Then we have our own inside funds too, because of the type of lender. We're privately owned, we're privately funded, so we have that advantage. So it's not some guy over in like Wisconsin funding your loan or anything like that.
Right.
So I appreciate you specifying that. It is these bigger banks that are willing to lend their own money to fund these types of loans. If that helps clarify that.
Gotcha.
Yeah, I like that you asked that question.
Yes.
Yeah.
Great. Well, Anna, it's always a pleasure to have you on, and we hope that this was helpful for everybody out there. If you are looking to buy or sell, or just really, wanting to explore that option, you need some information or have questions about the loan process, Anna's a great one.
And she loves jumbo loans.
And she loves jumbo loans. So,
yes. Well, thank you guys.
Feel free to call us, call Anna. Let us get you started and help you with all your real estate needs. See y'all next week.